Hello everyone. Today I am going to provide you with an overview of MCX Crude Oil Technical Outlook for the coming week, 29th of August to 3rd of September 2022. In order to go with the technical outlook for the coming week, first of all, we will review at what we were holding up for the previous week, how things panned out. So, as on 22nd of August 22, crude oil was trading at 7231 levels. And since long we have been mentioning the best of buy on dip and sell on rise towards supports and resistance levels. Since last so many weeks, we have been mentioning that crude oil has very strong support below 7,000 mark. Until the time it is trading over and above 6,400 mark, there is a high potential that downside is capped and the counter can witness pullback from the lows. At the same time, we have mentioned that because this counter is trading in overbought territory, so there can be high volatility and consolidation phase can be there for few weeks to come. So last week we mentioned that crude oil remains sell on rise and buy on dip at crucial levels, and the major level for the week was the support of 6,500 and the resistance at around 8,000 mark. In line with the view, crude oil made low of 6,921 before bouncing back towards the highs of 7,658 levels, and it ended the week in green 2.42 level at plus 2.42% at around 74.14 levels. So as we can see here on the charts, this is a monthly chart and we can see it clearly that crude oil has a very strong trend line support at around 6500 mark. On the flip side, on the higher end, 8400 and higher levels had the resistance. So we believe that this broad-based consolidation can continue in weeks to come. So now this is the latest chart as per the closing last week. Last week, as we can see here on the charts, the weekly candle indicates a kind of doji at the lower levels, and it's already a fourth week when the crude oil has made lows at around 7,000 levels. So the weekly chart clearly indicates this is blue line, that is a support level at 6,500 mark, and this red line is a resistance of 8,000 levels. Since the counter was earlier in a overbought territory, so we have witnessed that crude oil, after forming a big bearish engulfing candle on the weekly charts, the next 9 candles have been corrective one. But now, once it entered into an oversold zone, the counter is forming a kind of base at around 7,000 and 6,500 zone before witnessing a fresh buying interest. So for the coming week, once again, we believe that buy on dip and sell on rise can be looked as an outlook. The downside looks capped. The immediate support for this week will be at around 7,000 followed by 6,500 levels, which can be looked for contra trading longs, keeping strict stop losses. While the pullback cannot be ruled out once again towards 8,000 followed by major resistance of 8,600 mark. So we have mentioned the same outlook that consolidation can be expected within a range of 6,500 and 8,000 mark with buy on dip and sell on rise outlook. And within this broad range, one can use derivative strategies in order to gain the momentum directional returns along with the premium dilutions. Few strategies which we have shared in last few weeks. The recent one was as on 25th of August for gold, where we have initiated our gold hedged long positions. Same was the silver. There we also initiated silver long hedged positions. As on 24th, we have also initiated natural gas strategy, which was slightly negative hedged. In respect with crude oil, the last strategy which we initiated was on 24th of August for 17th of September expiry. As per the options, what we have done is it's a 3-leg strategy, and the bias was positive with upside cap. So there, what we have done is when crude oil was trading at around 7400 mark, we have bought 15th September crude oil 7200 call, and we have sold 15th September crude oil 8000 call and 8200 call. So as per the payoff diagram, we can see clearly that in this strategy, which is going to expire on 15th of September, if crude oil closes over and above 7500 mark, then this strategy will be in plus, and the maximum return in this strategy is between 8000 to 8500 mark, where the maximum return is 57,600 per lot. On the flip side, closing below 7200 mark will give the maximum loss of around 22,400 mark, whether it closes at around 7200 or even at 6500 or 6000 mark, the maximum loss is confined to 22,400 mark. So this strategy is a limited upside cap, but with a positive bias outlook, and the week has ended in a green at 1600 rupees per lot profit. Apart from that, the last previous strategy was initiated as on 3rd of August in crude oil, which was of expiry of 17th of August, and this strategy has given the maximum return, that was 33,100 as on the expiry date. Here also the view was range to negative in a 3-leg strategy, and as we can see here on the payoff figures, that closing below 7200 mark would have given the maximum returns of 33,100, and in line with the view, as on 17th of August, the expiry of crude oil strategy has given the maximum return of 33,100. Apart from that, we have also initiated few other strategies in respect with natural gas, gold, and other one. So friends, thank you for your precious time, and if you find our content is relevant, then kindly get a given email ID and the contact number. It will be a pleasure to provide you the queries in respect with your questions. Thank you very much for your precious time.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.